I am Vikas Singh, Vice President in Metals and Mining from PhillipCapital. We have recently initiated our coverage on steel pipe sector, where we basically have initiated coverage on Jindal Saw, Welspun Corp, Maharashtra Seamless and Ratnamani. They are the largest pipe manufacturer across the globe and in India as well. What we like about the pipe sector is basically after years of underinvestment and crude being 8-year high, what we feel that the investment in the sector would stage a comeback. Our thesis is based on the three factors. Firstly, domestic oil and gas demand because of the gas grid manufacturing is going to be good in the next 2 to 3 years. We are looking for a 15,000 plus kilometers of pipeline network in India. This would be supported by water pipeline demand, Nal Se Jal, where the government wants to spend 3.6 lakh crore rupees. And the second part of this thesis is the Europe's newfound problem with the Russian gas. So they would like to delink itself from the Russian gas. They have already announced roughly about 300 billion investments in the infrastructure by next 5 years, by 2027. That would drive the new pipeline demand in the Europe and MENA region, because they would be looking for the new source of gas. So domestic demand as well as the export demand is expected to remain good for next 2 to 3 years. And what we feel that the pipes segments, especially the steel pipes segment, which are also predominantly into the export pipe segment, would be doing pretty well during this time. Our preference is Jindal Saw, simply because of its diversification. That is one of the only pipe company in India which has presence in all of the steel pipe segment, whether it is oil and gas, water transportation or drinking water, apart from seamless segment, which is a niche segment of Ratnamani. This is followed by Welspun Corp. We like this stock because of its locational advantage. Welspun Corp is the company or the only mill in India which has a presence in Saudi as well as US. So they have their own mill in US, where they have recently won a very good order, and in Saudi. So the demand from the US, Saudi and the European region, they would be able slightly better be able to serve that. Remaining two companies are Ratnamani and Maharashtra Seamless. Maharashtra Seamless, I think next 2 to 3 quarter would be good, because they would be riding on very high crude prices, where the rig counts would be higher as well as the seamless pipe demand. And Ratnamani is a niche segment where we believe that is kind of a value pick from the perspective that every year it will give you 15 to 20% return. So we don't expect any sharp immediate return in Ratnamani from that perspective, but yes, this would continue to give you a greater return over the previous over the next 4 to 5 years. So pipe space, we believe, is in a very good shape, and next 3 to 4 years are going to be significantly better for the incumbents. Thank you.